On the non-MF side, and here's a small time chart because what I want to show you is that while a lot of people consider that MF is annuity, and it's not a wrong belief. You have to continue selling, you have to continue innovating. But from a logo sale perspective, it's good to think of it as an annuity business. A lot of the other businesses have to be built. A lot of these businesses don't have traditional competitor. They don't have RTA kind of entities. They don't only have depository kind of entities. They have fintechs, many other kind of players who compete with us. And I think the pleasing news is that sometime in FY21, we took the decision that we will bring over talent and start participating in these businesses. What you see in the timesheet is that in FY22, we built CAMS FinServe, which is the account aggregator and TSP platform. Good results, ahead of average results, but obviously nothing much has happened in the market so far. WealthServe, which is the digital onboarding platform for AIFs and PMSs, I would say has hit the ball out of the ground. We will show you some more detail, but just 250 installations in these 4 years. Practically every third or every fourth AIF and PMS in the country uses it. Its salience and supremacy is absolutely established. And we were very cagey when we started thinking whether, for HNIs, digital onboarding, et cetera, will make sense. It's made sense, and we've gone where we are. FY23, we built and commercialized MF Central. Most of you would have encountered MF Central, maybe using it. We built out the entire NPS platform. We brought over Fintuple as a company. And you will see that when each of these things started, it was an experiment. A lot of people ask me the question, what's your right to win? And what's your right of way, right? Isn't it better to take capital markets products and go to other countries rather than stay in India and diversify? And we've taken this path. We believe that in a lot of these, we have the right to win. And I'll just go business by business to show you salience, revenue growth, market share. If we are gaining on all of these fronts and we have frontline A-grade products, I don't think anybody can stop us. In most of the businesses, that is true, that we have salient products, we are gaining market share, and we are leaders, either number one or number two. There are some segments like Bima where we don't have a competitor, but nobody else has that product. So it's a question of all the forces coming together when we start selling. So we built all of these things. It took some experiments in FY24. We reimagined the whole KRA business, built out this 10-minute KYC, made an investment, which was larger than the Fintuple investment in bringing over Think 360. FY25, Bima Central, you would have seen that anyone else who's got the framework of demat insurance doesn't have a Bima Central kind of layer. It's been acknowledged in many places, and now we have an add-on layer of servicing on Bima Central. So we're not kind of we just want to make it bigger and faster, bigger and more salient, faster and faster. So you will see some of the evidence when I go to the subsequent parts. In FY26, we created and launched the payment gateway. That's part of the CAMS Pay family. And again, you saw that it already has double-digit revenue contribution to the payments business. We want to be circumspect. We don't want to go headlong into anything and then regret later. So we will take a step at a time, but very happy with the progress of CAMS Pay and the PG business. Consent Pro is something, I will just leave the name with you. It's called Consent Pro. It's about consenting related to the DPDP Act implementation. Does CAMS have a product and capability? Yes. We will just show this to you in a bit. We bought over the .x KRA business from NSE. We didn't buy it over because it represented a large lump of revenue, but we wanted our positioning as the number 2 KRA to become established quite well and to be kind of contoured quite well. We were number 3, we'd become number 2. Our nearest competitor kept claiming that they were number 2. We thought one decisive act is needed. So we brought this over, about 13, 14 lakh new customers came with it, but I think from a market perspective, a very decisive act. And then Radar is a platform which Think is built for the use of regulators right now, where a lot of social media handles and those kind of things can be monitored for the kind of activity you want to monitor. Are people stating the wrong things? Are they making claims? Are they promising fixed returns where fixed returns cannot be promised? Are they using celebrity, that kind of advertising, celebrity advertising or endorsement? So that's a product built by Think. So you will see in a company which virtually got its bread from a single or two product paradigm. We've built and built and built and built. Now, obviously, it cannot be endless. We don't want to fritter our efforts. We don't want to open markets which will, after 5 years, give us 5 crores of business. Nor do we want to open products which, after 5 years, will give us 5 crores of business only. But that process has to be that you try a few things. You try a few things, 1 or 2 of them will fall off completely, 2 or 3 of them will be stupendous successes, and the rest will be somewhere in the middle. And again, when I show you the revenue growth of non-MF, you will see, sorry, is it here? Yeah, so you see the revenue growth on non-MF starting not too long back with about a 70 crore base. FY26 will end at about 220 crores, so almost tripling in that 5-year time frame. And then our plans are to at least double this in the next 4 years. It's a large base. Small bases you can multiply faster. Large bases you will not multiply. But at a CAGR of 26% and improving profitability, and 3 businesses, actually 4 businesses, which, like I said, are taking share, are in the leadership position, and have salience as far as products are concerned, I think that's a great place to be in. The lead product in non-MF, therefore, right now, and it's likely to remain like that for the next 3-4 years, is our payment services, is CAMS Pay. This business has tripled in revenue in the last about 3 to 4 years, was about 26-27 crore at one time, and should be about in the range of between 90 to 100 next year, so tripling in about 4 years. What has happened? A few things have happened. UPI and UPI Autopay became, first of all, recurring payments expanded. We are in the recurring payments business, recurring payments expanded. UPI and UPI Autopay expanded. This format of giving regular mandates to banks expanded. That's one force. Credit cards, which we had deselected for a period of time because it was low margin, we decided to get in, build our own platform. So we launched this about a year back. This is about 17, 18, 19% of our revenue contribution already. And we will keep it here. We will keep it here. Both the CAMS, payment aggregator and the payment gateway business will expand. And then the other gratifying thing is that this was like an adjunct of the MF business for a long time. This was an adjunct of the MF business. I'm sorry, my throat is a little scratchy, so I'll keep coming here for a drink of water. But now the non-MF business has scaled past 50%. So that's just a diversification metric, that are these businesses getting to scale? Yes, they are. 100 crores will obviously be a scale revenue base. Are they too dependent on the MF market or the capital markets? They are getting diversified. Is it product and tech first? The answer is yes. Do you have leadership? The answer is yes. So our right to sell and our claim to win, I think, is very well established in the businesses that I'm showing you now. This was CAMS Pay. On alternatives. Slower growth than payments, obviously. It's a more mature business. We've been leaders for a length of time. Revenue is up 14% for a 9-month period. We launched Gift City a few years back in 21-22. But take a look at the chart on your right. Our assets, overall assets in the alternatives business, everything taken together, grew from 2.3 lakh crore to 3 lakh crore. Our asset managers serviced in a year grew from 190 to 250. Schemes grew. Schemes will grow faster than funds, because the same fund can launch several schemes, grew from 430 to 520. The number of schemes in GIFT has doubled from 19 to 38 in that 1-year period. And I think the last part, which is more about digital movement in the country, CAMS WealthServe, grew from 160 to 250 installations. At one time, our aspiration used to be to have this product have 1 new installation a week. We're probably selling at the rate of 1.6, and we will certainly grow to 500 in the next 2 or 3 years, and then keep going beyond. But again, very gratifying. Again, similar to CAMS Pay in some ways, better than CAMS Pay, just because of the length of time we've run the business in. The number one business, despite multiple players holding share. and scaling well, both from a revenue and profit standpoint. KRA, I said to you that visually we wanted to be recognized as the number 2 guy. We know getting to number 1 is difficult. It is a bit of a long haul. The number 1 player has had ascendance in this market for much longer than we've had. We've been selling to mutual funds, now to DPs and brokerages. They've been selling to the entire market for a long time, but we wanted to be established as the number 2 player. We've done that decisively. It's taken us 2 or 3 years, 3 years to get there by the acquisition of .x. So that's something we've done. Momentum with new client signups continues. It is not easy to break into new brokerages. It is not easy to go into one of the top 10 brokerages and say that we'll yank out your entire business. It's tough to do that. They have relationships that they don't want to yank out easily. But we've sneaked in by becoming 15 to 20% share suppliers in a lot of those accounts, which is where you see the growth coming in. And then a lot of technology has got infused. When we built this 10-minute KYC, my challenge to the boys was that you will get copied in 6 years. Theoretically, even today, nobody has this offering. Nobody claims you can go to everyone's website. They try to do same-day KYC, but they don't do a 10-minute validation like we do. And that is, I think, a small visual edge, which is continued to stay with us. The last thing I will talk about is CAMS repository, where we have been either number 1 or number 2 repository service in the country. We have 40% market share between us and NSDL. One of us is the biggest. For the last several months, we are the biggest. The layer of Bima Central, the transacting customer engagement layer, nobody has built. Nobody has that in the country today. And when we built Bima Central, it was our desire to have rapid adoption. The good news is for the e-insurance market that LIC announced in March last year that they will join the entire architecture. They've joined. Some of their policies have started now going live. Digital issuances are becoming live. So that's good news. Bima Central, the pace at which we wanted insurance companies to come, theoretically all of them want to come. The pace at which they're coming is not exactly the pace we wanted it to happen. So there are 4 insurance companies which are integrated, another 3 or 4 which are in the making right now. We've built a layer of value called Bima Central Administrator. I will not show it here, but just in a bit. And you would have seen, if you come to our website once in a while, or you see the LinkedIn page, you have seen that we have won accolades like in every forum, both domestic and global. And that gives us a lot of confidence that as this market ripens and matures, and it will ripen and mature, every customer is demanding digital interfaces and non-cumbersome ways of doing transactions. You will see this leadership fructify into real lumps of revenue as we move forward. So what do we want to target? Obviously, we want to target and again, we don't make forward-looking statements or commitments or guidances, but in a broad way, just in a broad way, if you're able to grow this non-MF pie by about 50 to 60 crore a year, there are years when we've grown it by about 45, so we believe 50 to 60 is not that big. The 225 can grow to 400 in 3 years. That's our first port of stop, so to say. That's our first port of stop or port of call to get to a 400 crore revenue by FY29. We've been growing, like I said, in the last 5 years at about 26% CAGR. Even if we hold the line of over 20%, we should be able to get here. So this is what, and some of the stuff I've just spoken to you about. So this is really what I wanted to show you from a year gone by perspective to instill the confidence in you that the backdrop of the price drop is taken out. We are back to peak revenue, peak EBITDA. Our operating EBITDA, which had fallen from 47 to 42%, is back at 46%. So that's a great move. Non-MF has compounded at the rate of over 26% in the last 5 years. Never an easy task. Never an easy task for a company like us. Startups and new categories may do that, but half the time they're selling things free. For a commercial price, to build revenue at the rate of 26% is never easy. To make the number of experiments we've made, tried new things, and make 4 or 5 big successes out of it is also not easy. And again, I'm very pleased that this journey is on.